Hey, what's up? Tim Bratz here. Today, I want to talk to you about if you are a traditional entrepreneur, if you're a traditional business owner looking to passively invest or get involved in real estate, this video is for you. So last week, I was on a discussion panel with a mastermind group that I'm a part of. And it's a lot of traditional business owners. We talk about business development stuff. Most of these guys are like e-commerce, or they have brick and mortar stores of some sort. And they all have like washboard abs, and they're traveling the world and doing a bunch of fun stuff, making a bunch of money online, making money virtually. And one of the topics that keeps on coming up in conversations with them is, how do I invest in real estate, right? I got all this money, I'm sitting on some cash, now I'm looking to deploy it into some real estate. And I think it's really, really important to convey a few different points, especially like when I was on that discussion panel and this topic just kept on coming up and everybody had it burned into their head, and I want to make sure that you have the same information that I shared with them. So first of all, real estate is a new business, okay? I know just because we live in a house or live in an apartment, or you drive by apartments, you drive by houses, you watch HGTV, it's very easy for people to think, oh, real estate's easy, right? It's a passive income and residual income are those key words and hot buttons that people think about when they think about real estate. So they think it's passive, and it's very easy to get into real estate and do real estate investing. Here's the reality. It's like if you and I went out and grabbed a beer at a bar and we looked around, we said, you know what? We should open a bar. It's a little bit different drinking a beer in a bar versus running and operating a bar. Real estate's the exact same thing. It's a little bit different living in a property versus owning a lot of rental property. And if you want to get into real estate, realize it's a new business. You're gonna have to go and start a new business, start a new LLC, start building out staff, have overhead, have liabilities, take on loans. It's a brand new business. And if you don't give it the time and attention you give to your traditional business, you're gonna get your legs taken out. Guys like me go and buy properties. Most of the apartment buildings that I buy are from smart, multi-millionaire entrepreneurs who made money in some other business, some other capacity, and they had so much money they needed to deploy it somewhere. They deployed it into real estate. But you know what? They didn't give it the time that they needed to start a new business. They didn't have a joint venture partner to partner up with. They didn't know how to interview management companies. They didn't know how to underwrite the deal. They didn't know how to underwrite the area. They didn't know how to handle due diligence. And they ended up getting their ass handed to them, and they realized, oh man, this real estate deal is sinking. And if I take my eye off the ball in my traditional business and spend my time over here, then my traditional business is gonna sink. Let me just jump back into my traditional business, give that my full time and attention, and they let the real estate fall apart. Then somebody like me who knows what they're doing comes in, makes an offer in order to solve a problem, and they're like, just get it off my plate. I'll give it to you for pennies on the dollar, right? And I don't want that to happen to you. So it's really, really important, first and foremost, that you realize that real estate is a new business venture. If you're not jumping in with both feet, it's very hard to dabble in real estate, right? And really make some money that you're looking to make. But I'm gonna give you a couple different options on ways to get involved in real estate and still be able to deploy some money into it without having the risk and the liability that entrepreneurs in that first kind of category would typically fall into. So that's the first point I wanna make. Second point comes from a lot of the conversation that I had with this group, and there were probably 40 people on this discussion panel. Huge attendance, huge amount of response and engagement, and a lot of conversation around Airbnb. Airbnb is cool. Airbnb is sexy. Airbnb is sleek. There's shows about Airbnb. It's easy to get romanticized on Airbnb and short-term rentals because those are some luxury, beautiful, fun type properties. The reality is most Airbnbs don't make a ton of money. Okay, you have to pay high property taxes. You have to watch out for certain government regulations, HOAs that don't allow you to Airbnb. Insurance is higher. There's a lot of moving parts. That truly is a lot of business because you have new people coming in multiple times a week. So you need to make sure you have cleaning crews and maintenance crews and somebody on call 24/7. You're essentially in the hospitality industry if you're in that business. So I know it looks glamorous and it looks sexy when you're not in it, but once you're in it, you got to realize You're in the hospitality. You're essentially running a hotel, and you need to be ready or have a team built out to be on call 24 hours a day, 7 days a week. Could you use a management company? Answer is yes. But again, it's a new business, right? So unless you're going to jump in with both feet and really scale it, it's hard to make money in Airbnb. However, what I told these guys was, if you're buying a second home, it makes a lot of sense to do that. If you've always wanted a second home, beach house. If you always wanted a second home in the mountains, if you always wanted a second home, out in the desert somewhere, or down in Mexico, or down in the Caribbean, or something along those lines, and you're figuring out, how do I pay for this? Well, you can jump into it and turn that liability that would typically take money out of your pocket and turn it into an asset and have it pay for itself. And I think that's a great way to get into real estate. If you're looking to buy a second home or a third home, the reality is you're not going to be able to use it all the time, typically not as much as you want to. But let's say you want to buy a beach house. Let's say you live in the Midwest, you want to buy a beach house in the Carolinas. You can go find a beach house in the Carolinas, partner with a management company, and typically the rents that come in during the high season, which is the summer and over the holidays, right? Whenever kids are not in school and people are vacationing, that's when you get the highest amount of rents. And so if you can not use it and you have a little bit of freedom of schedule where you can use it in the off season, which is essentially the other 8 months out of the year, majority of your carrying costs and holding costs and expenses in owning that rental property will be paid for over that 4-month time frame of the summer, holiday weeks, holiday weekends, spring break, things along those lines. So that's a cool way to get a property, have somebody else pay the operating expenses, the debt service, and then offer you the ability to go and utilize that with your family in the off season, the other 8 months out of the year. That's a great way to get into real estate and have an Airbnb or really diversify your portfolio. Here's what I would highly, highly, highly suggest though. The smartest entrepreneurs that I know, who are the wealthiest entrepreneurs, stay in their lane. And they stay in their business and they focus on what they do best, which is making money in their traditional brick and mortar, e-commerce, media, whatever their business ends up being. They stay in that lane. And then they find a great operator who is a full-time real estate professional, a full-time real estate investor, who has systems, who has teams, who has processes built out, and they partner with that person. Let's say, depending on the size of the check that you can write, you could turn into a partnership that has very advantageous and maybe preferential type terms rather than investing on a one-off kind of a deal. So that's something to think about. But the reality is you can invest your money 2 different ways and back it by real estate. The first way is as a debt. So if you invest as a debt, you can find somebody who flips houses and say, hey, will you pay me 12% a year on my money? And you're backed by a first lien position, which means you are the bank. So you get a mortgage, you get a promissory note, and you get added as an additional insured on the insurance policy. And there's typically a title policy as well. So you have protection against all those things. You lend them $100,000, they go and flip the house, they sell it for $150,000. You get all $100,000 back plus 12% annually on your money. And it's a great way to make a good fixed return, especially with all the chaos going on in the stock market right now and all the chaos going on with crypto and all these other different businesses. Real estate's still very predictable. The other option is invest in like a syndication as an equity partner. So you can either lend somebody money on that deal and say, hey, listen, instead of giving me a fixed return, I want 20% of the profits, whatever that looks like. But you don't have any predictable cash flow. And so you have a higher upside and a higher downside. Or the other option is kind of a hybrid of those two things. So that's kind of like what we do is we say, hey, we'll pay a 6 or 8% return on your investment, predictable cash flow on an annualized basis. And we give you a little piece of equity in these big apartment buildings that we're buying. And so that way you have benefits of principal pay down, property appreciation, tax depreciation, tax-free refinance proceeds, cash flow on an ongoing basis, on top of the predictable return on your investment. So if you want to get involved in real estate, those are a couple different options on some ways. If you're a traditional business owner, traditional entrepreneur, stay in your lane. Go and just make more money, invest with a great operator, somebody who has a track record, who has a team, who has systems, who knows what they're doing. And you can easily find these people in your own local community if you're looking to invest in your backyard. A lot of investors around the country have, or operators around the country have investors from all over the place. Like, I think we have investors from all 50 states. So if you guys want to invest in our deals, I'll connect you with my team. Happy to do that. But if you want to find somebody locally as well, go to your local real estate investors association and sit there. I think that they do meetings on a monthly basis in most communities. Walk in, it's 10 or 20 bucks to go to a meeting, and raise your hand saying, hey, I have money, I'm looking for great operators to invest my cash with. And then have conversations with those different operators. Make sure that they know what they're doing, that they have systems in place, they have a track record in place. Ask for references, right? Make sure that you talk to other people. Hey, did they pay? Did they pay in full? Did they pay on time? What happened when shit hit the fan? Because shit always hits the fan. But did they communicate it? Right? And what did that look like? And how do they work? Are they the kind of person who's going to go work third shift at Taco Bell to make sure you get your money back? Do they have that kind of character? Right? Do they convey that to you? And if so, that's a great person that you want to work with. If not, probably let them go by the side. There are a lot of great operators out there. If you want to reach out to us, we'll connect you with a few people from our mastermind. I know a ton in pretty much every single different state. So just hit me up. I can make some introductions for you locally. If you're interested in some of our deals, I'll introduce you to Fadi Boumitri, who's my chief investment officer. We talk about doing some of our own projects. Get involved in some of our deals, whether that's the Airbnb type properties or apartments, or we do some triple net lease kind of stuff, and even self-storage facilities and a couple other projects as well. But if you're an entrepreneur and you're looking to deploy money into real estate, I would be very careful not to jump in unless you're ready to go all in on it. Unless you're ready to build a new business, then it can make a lot of sense. But if you are a traditional entrepreneur and you're just looking to deploy money and you think you can go and buy a property yourself and passively invest in it, I wouldn't do that unless you can jump all in with both feet. So hopefully this was helpful for you. If you have any questions about this stuff, don't hesitate to reach out. I'm happy to be a resource for you. Shoot me a message on Instagram or Facebook, or put a question in the comments below here on the YouTube channel. And I'll engage with you. I'll make sure that I respond to you and point you in the right direction, offer some references, connections, resources, whatever that I can in order to help you out on this journey. So appreciate you guys. If you got some value out of this, please like, subscribe to the channel, share it with other entrepreneurs who are looking to deploy some money into real estate to make sure that they don't make the same mistake that some of these other guys have made and get their legs taken out. I want to make sure that you guys maintain your wealth. That's what real estate's all about. Not just growing it, but maintaining it, having something that gives you a lot of security and backing by prime real estate, something tangible, and multiplying your wealth in that regard. So appreciate you guys. Till next time, be your best.